What's the stock you've got your eyes on this week?
I'm going to go healthcare and watch 23andMe, which is a recent SPAC IPO. Remember that went public through Richard Branson's SPAC, Virgin Acquisition Corp. That acquisition recently completed. So 23andMe has $770 million of cash on its balance sheet right now. It just announced its earnings. They were underwhelming, to be honest, but didn't include any of the growth that could be fueled by the SPAC money. 23% revenue growth year over year, which, remember, they sell a consumer product primarily. They sell the genetic testing kits.
Yeah.
And so the business is rebounding nicely over the pandemic. The real potential in this business going forward is its proprietary genetic information, which it now has 11.6 million genotyped individuals in its database. And it's got a partnership with GlaxoSmithKline where it splits any revenue from treatments developed from its information 50-50. One therapeutic is in phase 1 clinical trials right now. One is in preclinical trials, and there's no telling how many possibles are coming down the pipeline in the future. And if any healthcare investor could tell you, I wish I had Brian O'Reilly still on to weigh in on this, but any healthcare investor could tell you that one successful drug could be worth more than 23andMe's entire market cap right now, which is in like the $3 billion range. So a lot of potential here, still early stage. Like we mentioned with Latch, went public probably earlier than they otherwise would have if the whole SPAC boom hadn't happened.
Yep.
But it's trading at a big discount to earnings, and that's mine, 23andMe.
All right. Well, I'm going to be digging a little bit more into SoFi, another company we talked about on the show here before. Earnings for SoFi came out recently. There were good results. Management exceeded their own expectations. Members up to 2.6 million. That was up 113% from a year ago. And it also represented the 8th consecutive quarter of accelerating growth. And that to me is really, that's important, because I think this is just the shaping this financial services for an entire new generation. These companies like SoFi, bringing everything under that one umbrella, so to speak. You can do so much for a business that really just started out in the lending side, right? I mean, the lending segment revenue was up 47%. Financial services segment revenue grew 600%. Lending is the primary part of the business today, but I mean, you can see with the strength there and the products and the members and the cross-selling that comes from that, I mean, the acquisition costs just go down considerably the longer these relationships last. And so to me, there's a lot of potential for a business like this, and in one that is built on a digital backbone, so to speak. I mean, they do a lot of good things with the data that they get. I mean, that data we talked about with Square, for example, Square being able to make smart loans to their customers based on all of the data they get from their customers using that hardware and software. SoFi is doing a similar thing. I mean, they're taking that data, using artificial intelligence, machine learning, and really using that data to make the best lending decisions possible. And it seems like it's working out for them. So another one that came public probably way earlier than it normally would have, thanks to the SPAC boom. And so you probably see some bumps along the way here for this one, but one that I think you and I both agree has a very promising future.